Ever wonder how big a retailer Amazon really is? It should be a simple question, but it turns out it's a little more complicated than you might expect. Spoiler alert, Amazon's probably bigger than you think. Grab a coffee and let's get into it.
Your margin is my opportunity.
Hey, I'm Jason Retailgeek Goldberg. I'm a fourth-generation retailer. I've been a retailer, a brand, and a consultant in the e-commerce industry for nearly 30 years, which means I'm old as dirt. I'm the Chief Commerce Strategy Officer for the Publicis Group, so I work with many of the largest retailers and brands in the world. This channel offers weekly quick hits and an occasional deep dive on the latest trends and news in the e-commerce industry. So how big a retailer is Amazon, and why is that a tricky question? Well, the challenge is that most of the metrics we get about big retailers like Amazon are designed for investors. They're designed to tell us how good an investment Amazon is, what kind of return an investor might get in an investment they made in Amazon. So these are things that we get direct from the company, like Amazon's revenue, their EBITDA, and their free cash flow. They're things we get from the public stock markets, like their stock price and their market cap. And if you're a really smart professor like Dan McCarthy or Peter Fader, you might even be able to try to calculate corporate valuations based on publicly available customer data. But all of these, again, are metrics that are mostly useful for investors. And as a retail guy, what I care the most about is how much stuff did Amazon sell last year? And what percentage of the consumer's total wallet was that? What was their retail market share? So how do we find out that number? Well, for a traditional retailer, their revenue is very similar to the amount of stuff they sold. So if we think of a retailer like Target and we go to their earnings report, we can see that in 2020, Target's revenue was $92.4 billion. And it's a pretty safe assumption that last year, Target sold about $92.4 billion of stuff. Pretty straightforward. So if we go to another retailer like Walmart and we look at their earnings from last year, their revenue was $559.2 billion. But here we have a little wrinkle. Walmart's a global retailer with stores in the US, Canada, China, South America, and we want an apples-to-apples number. And since most retailers don't operate in the exact same markets, we have to find a market that all of these retailers have in common, and we have to get the numbers just for that market. So in the case of Walmart, we'll use the US, and if we dig a little deeper into Walmart's earnings report, they tell us that they sold $370 billion worth of stuff in the US last year. So Walmart's US revenue was $370 billion, and we can assume they sold about $370 billion worth of stuff. Again, relatively straightforward. So what's the problem with Amazon? Well, the challenge with Amazon is a more complicated business model that Amazon invented back in 2001. And essentially at a 2001 offsite, Jeff Bezos drew this diagram on a napkin, and he called it the virtuous circle, or what we know today as the Amazon flywheel. And essentially what it says is that if we let other sellers sell stuff on the Amazon website, that will improve our selection of goods. And the bigger and better our selection of goods, the better our customer experience will be. And the better our customer experience is, the more shoppers will come to our site, the more traffic we'll get. And the more traffic we get, the more desirable it will be for other sellers to sell on our marketplace. So essentially, this virtuous circle is that this wheel would keep spinning and spinning, and increasing the number of people that we're selling on the site, improving the selection, improving the customer experience, and rapidly growing the traffic. And over time, the hypothesis was that that scale would allow Amazon to have a lower cost structure, which means they could lower their prices, which would just accelerate this flywheel. So that was the Amazon flywheel, and it opened the door to Amazon adopting this alternative retail model that we call a marketplace. So to understand a marketplace, we need to back up just one step and look at what the traditional retail model is. And so the traditional wholesale model, or what I'm going to call the 1P model, is that a manufacturer sells a widget to Amazon for, let's just hypothetically say, $80. And Amazon marks that widget up and sells it to a consumer for $100, right? That's a very traditional wholesale model. And if we look at the retail math behind that model, Amazon's revenue on that sale was $100. Their profit was $20, and their profit margin was 20%. And yes, you did just see Jason do math in public. You're welcome. So that's the traditional 1P model, pretty straightforward. But remember, Amazon decided to start letting other people sell stuff straight to their customers on their website. And when that happens, they just take a commission on that sale, or what they call a take rate. So this marketplace model is what we call a 3P model, where third-party sellers are selling direct to the consumer. So in this model, a manufacturer or a seller sells a widget direct to a consumer for $100, and they pay a commission to Amazon of $15. Well, if we look at the retail math behind that transaction, it looks a lot different than the 1P transaction. Amazon's revenue in that transaction was only $15 because that's how much money they got from the seller. And that sale was almost pure profit to Amazon, so we're gonna say that they earned $14 in profit on that $15 commission, which represents a 93% profit margin. So as you can see, that 3P math is very different than the 1P math. And if we summarize that, in both cases, the consumer spent $100. There was $100 of consumer demand, but the revenue from those two transactions was wildly different. And in the case of Amazon in 2020, more than 62% of all Amazon sales were 3P sales. They were marketplace sellers, are the dominant majority of all sales on the Amazon platform. So you can see we can't use revenue as a surrogate for how much stuff Amazon sells, since so much of Amazon's sales were actually 3P sales, where Amazon's revenue was just this commission. So what are we gonna do? Well, we invented a new metric that I call GMV, or gross merchandise value. And this is simply a measure of the consumer value of all the stuff a retailer sells, right? So this is how much consumer demand there was in any given retailer's business that they were able to fulfill with their merchandise. And unfortunately, Amazon doesn't tell us exactly what their GMV is. But they do give us clues, and a lot of people use those clues to try to create an estimate for Amazon's GMV. So 3 estimates that I frequently use are a stock analyst called Cowen and Associates that publish a detailed Amazon investment report every year. Marketplace Pulse is a great website that offers a freely available estimate of Amazon's annual GMV. I'll put a link in the show notes. And then a market research firm called eMarketer publishes a deep dive into Amazon with a forecast and an estimate for their GMV. So if we look at all 3 of those sources, they all estimated that in 2020, Amazon sold between $480 billion worth of stuff and $490 billion worth of stuff. Now, a problem is that they all just estimate Amazon's global GMV. So we have to jump back into Amazon's earnings report and see that last year about 62% of their sales were in the US. If we apply that ratio to the low end of the GMV estimate, we end up with an estimate that Amazon sold about $291 billion worth of stuff in the US last year. If we take the high estimate, it's closer to $299 billion worth of stuff. So that's the range of Amazon's US GMV. And again, that US GMV number is much bigger than what Amazon reports as the revenue from their US 2020 sales, which was about $236 billion. So you see a lot of simple reports listing retail sales, and for Amazon, they're gonna list their global sales or they're gonna list their US sales, which are based on revenue. And they're gonna show Amazon at around this $236 billion in sale, when we know that Amazon probably sold $290 to $300 billion worth of stuff. So if we stack up all of those retailers against how much stuff was purchased in the US last year we know that US consumers spent about $5.6 trillion on retail goods. So if we look at each of those retailers we just discussed, Target's $92.4 billion worth of sales represents 2.7% of all US consumer spending last year. Amazon's $291 billion would represent just over 5% of all consumer spending, and Walmart's $370 billion represents 6.6% of all consumer spending. So you can see, by virtue of the marketplace model, Amazon's larger than many people give them credit for, but they're still a relatively small part of total consumer spending in the US, and they still have a ways to go to catch up to Walmart, although 2021 is going to be a really interesting year to watch. In the highly unlikely event that you didn't just get enough of me, I have great news. There's more than 300 additional hours of me on the interwebs. That's right. My good friend Scott Wingo and I have a podcast called the Jason Scot Show. It's a weekly e-commerce podcast where we go into topics like this in much greater depth. Scott's parents spelled his name wrong, so you can search for Scott with just one T wherever you get your podcasts. And I hope this video was helpful. Whether you agree or disagree, I'd love to hear your thoughts in the comments below. I'd also like to know what other videos or e-commerce topics you'd be interested in. It would really help my channel to grow if you'd click on that like button and subscribe to my channel. And until next time, happy commercing.